So the aim of this particular program is to inform you the best way to use the software, and if you are having any issue related to the software uses, you can ask here. And as per our protocol of buyer support program, those who are the buyer of our product, any product if you have bought, we have just introduced this buyer support program from the month of July, and because of leave last program we could not able to conduct, but this month's first program. So here in this program you have been entitled for two different events. One is in the second week, another in the fourth week, Friday. And normally it used to be in the evening. I kept it. Earlier I scheduled in the morning, but many has objected it, asked that if it is evening it will be better. So evening 4:30 to 5:30 we have scheduled it. So the objective of this program is, if you have any query related to the software, you can ask here. Any trade related difficulties whatever you are facing, that also you can ask here. Any enhancement to the tool you are expecting, that also you can suggest here, so that if that is feasible we can add those features in our future updates. And here also one announcement I want to make. Many of you are the OneSD software buyer, one standard deviation software you have bought, and many of you have asked that if I get a full course then it will be better. So we are currently having this Diwali discount, wherein you get all our software along with the books and DVDs at a cost of 15,500, and the course cost is 12,000. So remaining amount whatever is there, 3,500, on that 630 rupees tax will be there, that is GST. So whatever the amount, differential amount you are paying for the software, for that tax will be there. So if you want to go for that, you can just opt for this thing. And the second announcement I just want to make here, if you are the user of Smart IT tool and OneSD tool, try to update this software. And OneSD also, one more update we are going to release, and try to update this so the commodity interface is being added into the software. You can use that. So that is the objective of this particular update. So coming to the questions. So this is the specific summary related things what 9S Mopanaji asking. This will be given in the next update. So update will be released tomorrow. You can update that OneSD so that that problem will be rectified. So here in the option scanner, can we have the reference price of Nifty future like the OneSD is possible? Yes, definitely. I will take your suggestion, Mr. Ram Kumarji, and we'll add that. There is no problem in that. We can add that. So in the future update, please wait for. But currently, immediately, I cannot make it. But we'll surely add it. And in this regard, if you can put an email, it will be better. I'll keep in record. So how to select most active options in the option scanner? So this is the question being asked by 9S Mopanaji. So how to use this particular feature of option scanner to get the most active option? So I will just go to this option scanner feature more as compared to the other strikes. That is the most active options. So the most active options by definition is the option which is trading more as compared to the other strike option. So here just I am going for the Nifty. I have loaded the data. So once this data load is completed, I have all part call option and put option. These are the things is given. So if I go for all and analyze, I will be getting all tradable strikes. Whichever the strikes is currently trading, their IV, their premiums, and on buy entries, on sell entries, what will be their expected premiums, all things we are getting. Now we need to filter it because this is a crowded domain where all strikes are picturing. So if I want to go for the call options, and if I am just selecting the greater than equal to, so here I am getting all four options available here. So I'll just go for the last traded price and analyze. Greater than last traded price. So last traded price of the Nifty, if I take the reference of today, it has last traded 10,017.85. So this is the last traded price. So the strike which is next to this, so most active options will be 10,050 and 10,100. So the strike which is very close near to your LTP will be the most active strike. So here you got all strikes, you have filtered it out. Furthermore, you can filter it out. So here if I just go for the between things. So if I just go for the between things and just go for the strikes between buy entry and targets and analyze. So I get only one. Buy entry and the targets, I am getting only one option here. So this is the only one strike I am getting. And if I am going for buy entry calls to buy in the uptrend, so I'll get two strikes. So this itself is filtering the most active options based on your choice. So between buy entry and the target, so this is your buy entry 10,037. Last target is 10,148. So between this it is filtering 10,050, 10,100. So between this it is filtering, and this is the most active options you can conclude. So when we can calculate the levels for the next trading days, whenever you are having such kind of things, here suppose I want to do the trade for the next day. So here what I have to do, I have to go for the positional option. First I have to load the data, and data is got loaded. I have to go for the positional. Number of days you have to do 2 because current day is 1. So number of days are 2, and you have to just calculate. So here, so I have to little clean now. For tomorrow, that is called your BTST. Better post mid-noon, means post mid-noon you can generate it, and so that you can get a chance by 3:30. So 12 noon onwards you can generate, but sharply 12 noon if you can generate, it will be good. So here I'm just loading the data, positional option to calculate. So once you calculate these things, it will give you the levels here. So 12 noon you are calculating it, and by 3:30 if you are getting a chance at 10,030, buy it with proper hedging. Hedging should be, if you are buying at 10,030, your hedging must be 10,000 put option if it is giving that thing. Or if you are selling at 10,005, you must hedge it with the 10,000 call option. So positional 2 and any native or web mode you can choose, calculate. So you will get all the levels. Previously the web mode was having some extra target levels which was the native mode was not having. Currently we have enabled that. If you update it, you will get all targets here. But do not forget to hedge it. Hedging is must. If you want to stay in market in long run, you must hedge. Don't think that without hedging I can win the market. So hedging is very, very important whenever you take the position 1+ day, because overnight many things can happen. You cannot control those things. How to select the stocks for 1 or 2 months? Mr. Naresh Kumarji is asking how to select the stocks for 1 or 2 months. So whenever you select for stocks for 1 or 2 months, specifically for 1 month or 2 months, there are many fundamental factors you can follow. You can follow many fundamental methods are there. However, I will suggest you one best method. If you are a visitor of our website, just go to this, and I have given couple of videos here. So best way to choose the stocks for investment, this is one video is being given here. Best ways to choose the stock for investment. Just go through this video wherein I have given a different method wherein using the ratios, Johnson's alpha, Sharpe ratio and Brenner ratio, you can choose the best stocks. 3 stocks from the same sector you have to take. Then you have to follow the process what I have explained there, and by that process you can get it. So this is what the question of Naresh Kumarji. So till point 5 is asking if the price is between buy entry and the target 1, shall I buy? You can buy till point 5. Till point 5 you can buy. So buying till point 5 is allowed. So nothing wrong in that. Any other question? You can ask me. Anybody has any other question, you can ask. Om Prakash ji, hedging is necessary for every occasion, whether it is intraday or positional. This is a good practice. Practice of hedging is a very good practice. Practice of hedging is very, very important whether you accept it or not. Majority of the traders lose money because they never follow hedging. So this is for now. We are going to see for this weekly trend analysis. So Nifty, we have, this is the weekly trend analysis, and I have already generated the report for that, and that it is been given. And here one small correction is there, so we'll make it the 0.618 to 0.786. This is the death zone. So by mistake it is being colored here. So this one small change we can do it. So, and intraday levels you should generate post 9:30, first 5 to 10 minutes. You give a gap, then you should generate the intraday levels and follow it throughout the day. No need to recalculate it. Follow it throughout the day. Positional levels, you can, if you want to aim for BTST related trade, as I told you, you must initiate. You must do the calculation post noon by choosing this positional option, and number of days has 2. And before 3:30, if it gives a breakout, enter it, because your aim is to make money in the next day, and it must be with the hedging. And one more question also come: what is the best process to choose the stocks for investment for 1 to 2 months period? Best, so I have suggested you, please go through one good video I have given here. Best way to choose the stocks for this thing. This is a 1 month program we have conducted last year, 28th September onwards. So you can see those videos here, recorded videos, lot of concept I have given. So you can, best way to choose the stocks for investment, one simple process is being given. Just you have to follow that process, and it is highly successful. By this process, if you select the stock for investment, you will definitely feel the difference instantly. So this is a video you must go through, and you must work out a Excel sheet. Same way you can just do the analysis. So this is what I have told so far. And weekly analysis of the Nifty. is as follows, and it is 10,017.85. It has closed today. Monday, if it is opening above 10,040 till 10,065, you can think of buying, and you should have a appropriate hedging for that. If you are buying here 10,050 or 10,000 put option, you can think of buying. And this, once this you are buying the options, hedging with that, your first target is 0.618 level, post that 0.786 level, and you go on trailing the stop loss based on that. So this is the process always I used to tell. Once you achieve the first target of 10,077, trail your stop loss to 0.382 level. Once you achieve the second target, trail your stop loss to 0.5 level, and same way you can just go on trailing, and your growth cluster will be 10,071. Means here you will be finding out maximum resistance. Once this level will be get crossed, you will get higher targets. Similar way, if the price opens in the second cycle, then price, if it is opening at the second cycle, then your growth cluster will be its stop loss, and your targets will be the same manner it will go on. Suppose the price Monday it has opened at 10,100. So no need to enter here, wait for the second cycle. If there is a gap down also, if it is opening at 9,050, not in your zone of entry, then better don't enter, wait for the second cycle. So for any second cycle, the cluster will be the stop loss, and you must hedge the trade. So this is what I have told. And this is the process. Once you are trading, you will be highly successful. And few zero loss option strategies also you can form. Zero loss option strategies, which will be very, very beneficial. So in any kind of trend, it will give you the things. This is very, very simple to follow that things. If you have option strategy software, you can able to simulate the profitability of that. And here stop loss levels, Chanu Vermaji, you are asking about this is a very good question he has asked. Stop loss levels are very high as compared to the profit levels. Many traders used to ask me this question. Many traders used to. What is the definition of a stop loss? Can anyone will tell me? What is the definition of a stop loss? Most of you have gone through extensive study of many technical studies. You would have attended many webinars. You would have gone through many books, periodicals, and it is flooded of information in the internet. Can anyone will tell me the definition of a stop loss? The definition of stop loss, as Nainesh Makwane ji has told, Ramkumar ji has told, it is the price point from where the trend reversal happens. अगर मैं हिंदी में बोलूं, जहां पे ट्रेंड बदलेगा उसी को ही स्टॉप लॉस बोलते हैं. Where the trend will change, that is called stop loss. Nowhere it is being told stop loss is the point where I like to put 5 point below, 10 point below, or where my mind pleases me. Anywhere it is being written that stop loss means where I am feeling happy, I should put it. Where 10 point below I can put it, 5 point below you should put it. That kind of definition nowhere is there, Mr. Chanu Vermaji. Nowhere, no book, no periodical, no technical analyst, nobody has told so far. Put a stop loss where your mind say you to put a stop loss where you like to put. That definition nowhere is there. Definition is where the trend changes. We are following the Fibonacci principle here. Ratios are being given here. So where the Fibonacci principle says you to trend change will happen, you will put the stop loss there, or you will put the stop loss where you like. So here the trend change happens. 10,071 if I am entering at 10,115, my trend change happens at 10,071. So there only I will put the stop loss, because whenever you follow any method, you follow that method as per the guidelines of that particular method. Do not dilute it. Now question comes, there is a here 45 point of stop loss is there. So if the stop loss triggers, I will be getting 45 point losses here. And if first target I achieve, I am just getting 15 point profit here. If I am getting second target, I am getting 25 point profit. If I am getting third target here, then I will be getting near about, you can say for 15, 5, 20, 32, 37 point. So till I have not achieved the third target, this 45 point liability, so risk reward you calculate that risk reward. Risk reward is not at all a concept of non-hedgers. Those who never hedge, for them risk reward is meaningless. But people used to calculate this order. So this is a half-cooked and a raw knowledge. You have calculated stop loss 45. So first target giving me 15 point, second target 25, third target 37, fourth target only I am getting some, you can say, some for 50 points. So I have calculated the risk reward. Risk is 3 rupees first with stop loss, first target 3 rupees with 1. So for 1 rupee profit, 3 rupees risk I am taking. From the first target itself I have calculated. This is being done by majority of the trader. From the first target they assume and calculated the things, 3 rupees risk, 1 rupees profit. So what is the next process? If that is the case, then I have two ways. Either I can dilute Fibonacci principle, means I should put a stop loss which is pleasing me, not for the Fibonacci principle, not for any principle. So I will put 1:1. So 15 point I should put. So 10,100 itself I will put the stop loss, and it will get triggered, and I will come out. I will feel happy that yes, I have taken 15 point risk reward, 100% risk reward. I am happy. But 10,071 never come. From there it has reversed. Then you will hit your head. You will say that yes, I come out. Then after it has moved down, because you have not followed any principle. Fibonacci principle has not told you that. You calculated the risk reward to pleasing your mind. You put a stop loss which is pleasing you. It is not based on any concept, no, based on any method. And at the end, after doing such kind of trade for year-long period, after doing such kind of foolish trade, I used to say such kind of trades are the foolish trades. After doing such kind of foolish trades for many years, after losing all your wallet, you blame that it is a gambler's game. You cannot do anything there. It's a gambler's game. We cannot do anything there. So the point is, you have not followed any method. First point, your first mistake, you have not investigated. I have diluted the concept. I have not followed any method. Number one. Number two, the risk reward what I have calculated, this is only to please me. So I have calculated this risk reward and I have just exited, and that was also a wrong move. Not only a wrong move, it is a bad move, and it is completely not based on any calculated move. So thing is that now what we have to do? We have to manage the risk. And this is not a practice of trading. This is the managed risk for everyone. Suppose many of you are traveling in the aircraft. Many of you are traveling in the aircraft. You know there is a chance that it will get crash landed and I will never be alive. You are taking a flight from Mumbai to Chennai. There is enough risk to kill yourself by that move. You have taken a life-threatening risk by boarding an aircraft which has all probability to crash at any point of time. So what you have to do? That point of the things is there. You have taken an optimum risk, because that more than that risk, no other risk is there. The risk which you have taken for your life, for a simple travel, maybe you are just going for a holiday trip. Maybe you are just going to meet one of the friend, but you have taken a life-threatening risk by boarding a aircraft. So there, one announcement comes, you have to, if there is a technical snag, every flight you take, this is the standard procedure. If there is a technical snag, we'll provide you a life jacket, put it. In case water landing, you will be guided. You first protect yourself. Protect yourself. That is very important. First you protect yourself, then try to help others. This is very important things you used to tell. First protect yourself, then you try to help others. There is a part of a protect is coming here. Protect is coming here means you must mask yourself. You must put your life jacket first, protect yourself, then you try to help others. You have taken a risk. So there you have not created any risk reward. Whether anybody has taken going for a friend's wedding or anywhere to travel. So doing any risk reward analysis, no. Why should I go for that marriage? Marriage, I have to give 500 rupees or 1000 rupees gift and eat something. But if this is a venture of only 2000 rupees, but if anything happens, I will die. Such kind of things, nobody does a risk reward. Second, many such examples you will find out, wherein it is being given that you protect yourself first. Many such real life examples. But when it comes to trading, why you are hesitating to protect your trade? You are buying one lot of Nifty, which is 10,000 plus, and 75 is the lot size. 7.5 lakhs risk you have taken, and you are hesitant to take one option, and you are just giving a excuse that I do not know option, I do not know how to use it. This is just an excuse that I do not know how to use the options. What is wrong? How you have learned to enter to Nifty future trade? What is wrong in that? You protect yourself. There is a 45-point risk is there. I don't want to carry this 45-point risk. I want that this risk should be reduced to 15-point or 10-point. I can hedge it here. I can hedge it with 10,100 put option if I am buying a future. Hedging will reduce your risk liability, and hedging will not allow you to dilute any principal. If you use the hedging, there is no point in diluting Fibonacci principle. There is no point in putting a stop loss which is pleasing your mind. You put a stop loss where the trend change happen. You have hedged it with 10,100 put option. Market has fallen down to 10,071. That time you try to close the trade and come out. So 45 point you have lost in future. Definitely at that point some 20 or 30 points you could have gained from the options. So your effective risk is only 15 points. But if you are going for a second target, your risk reward also matches properly. So this is a good practice to have a hedging. And this is what I am promoting from the many years. Many years I am promoting the same cause, that you must hedge, you must hedge, you must hedge. So hedging is very important irrespective of your analysis. So is asking 24,200 breakout given, bought it, gone till 24,275 and gone to a day's high of 24,290, retraces back and come down to 24,200. So this is the trailing has a trigger, means the trailing of that particular thing is a trigger. If you have booked the profit, here, nothing wrong, you can enter it here with a proper hedging. If you have booked the profit here, then you must enter at here in this point with a proper hedging. But if you have not booked the profit, I rather suggest you to hold the trade because you have not hit the stop loss. You can rather try to hold the trade. If you have booked the profit at first target, better to re-enter. There is nothing wrong in that. There is nothing wrong in that. Just one speculations you can do. So I'll just go to one small option strategy here, which I have promised you that it's a zero loss strategy. So what happens here? If the Bank Nifty or Nifty gives you an uptrend breakout here on Monday, so 10,040 it has come. So maximum we are expecting 10,172 level. many ways we can form. You can form many ways the delta neutral strategies. So I'll just take you to that option strategy software. So there you can just get a more clarity on this strategy. So here I'm just loading the Nifty future, and here I will just buy this. Just I have to put one simulation so that I can able to uh, do the Greek calculations. For that only I am just doing it. Put option also I bought it. One lot. And 5 days I am going for hold. For 7 days I am going for hold. Calculate lot size. This is one. And I am just calculating this one. Go for the Greek scatter. All futures having a Greek of 1, delta of 1. So delta of a future is 1. And this analysis says that you have the probability to go till 10,172. And this is your first target, this is second target. So second target 10,092. So I'll just go for the 10,100. So it is very close to that. So 10,100 call option having a 0.47 delta. So I'll just go for a delta 10,100 call, which is having 0.47 delta, and it is trading at a price of, or last traded price is 48.65. So 48.65. So if the future is giving a breakout above 10,040, definitely this also will increase by 10 or 12 points. So say if the future has given me a uptrend breakout 10,040, and definitely it will be some 10 points, I can get it in the 55, 57 range I can get. So future given me a breakout 10,040, 10,040, and it is having a delta of 1. If I buy future, it is 1. If I sell future, it should be minus 1. So this is for future buy, and this is for future sell. So if I buy or sell the future, so this is how the delta picture will be. So this is the things, and currently it is at 0.47, and that time if it is increased 10,040, where this is being taken with a reference of 10,000, 10,080. If it is increasing above, if it is going to a price level of 10,040, definitely this Greek also will, this delta also will change. Premium also will change. I am assuming that okay, if that premium comes, then it will be 54 or 55 rupees it will be trading. So 20 points it is going to be another 10 points, 55 to 57 rupees you can get. 57 rupees optimum you can take. Delta also at that time you can say 0.48 or 0.5 level also it will be there. Just like this one. So if I am just selling a future here, selling a future, so at 10,040, so I have a delta minus 1. If I am buying two lots of 10,100 call option, so that process I am adding a 0.5, and by this process how much point I have invested in the market? 57 into 2. So 144 rupees I paid to the market. I just want, if there is a time decay, I may lose this money. So I have to just look into this downtrend level. So where is the downtrend level comes? 9995, and I can say that 9981 level. So by this process, I can just go for a put option. So 9950 level, any put option is there. So 66 rupees it is trading, having a delta 0.29. So 66 rupees it is trading. So I can just go for selling a 9950 put option. 66, that particular time it may be trading at 53 or 54. Once the Nifty goes for 10,040. So by this process, premium management, how much I have done? 11,114 I have paid. 54 I have received. So 60 rupees I have made the investment. What is the delta has become? So I have just taken, and this 9950 is having a 0.29 negative delta. Minus 0.29 is the delta. So minus 0.29 or zero point 0.3 is the delta of this 9950 products. So my net delta comes to 0.29. So this, why this particular strategy is being told as a zero loss strategy. Suppose Nifty has fallen, theoretically we can estimate 10,040 after touching Nifty has fallen. So 9950 to 10,040, it is a 90 points I have, and I have also 54 points I have received in this order of sell. So totally I am receiving 144 points. I am investing 114 points. So in case of a fall, I will be beneficial to me. In case of a rise, I can theoretically I cannot estimate the profit. If you can just estimate the profit in this order, we are selling one lot. Current price itself is there. So this we are buying two lots. Call option, two lots, 10,100. Buying two lots. We are selling a put option of 9950. This is called your covered put with call load strategy. We are selling one lot. Covered put with call load strategy with a delta neutral approach. If you can calculate this one, just look at the profitability of this thing. In case there is a fall, you are gaining. In case of it is going in an uptrend, 10,100, 10,173, your profit is gaining. In case of a fall also, you have a small profit, very small profit, but profit is there. Similar kind of strategies with the delta near zero, if you can, and net Greek is coming this way, 0.10 currently. So at that particular time, once the uptrend gives you breakout, you can. So if you are so much frightened with the particular future trade with option heads, try to form similar kind of strategies. Try to form similar kind of strategies. This will give you a great freedom to protect your money. Same time you have to make money. So you must ask me, if I am forming this kind of one strategy, when I should exit and come out. If there is no profit, there should not be any loss, where I should not lose anything and come out. Can anyone will tell me, if I am forming this particular strategy, when I should come out of this strategy? 10,040 it has crossed. I formed a covered put with call load strategy, keeping delta as near zero. If it worked, gone till the 10,100 level, which is second or third target. Above that, I will book the profit and come out. If it doesn't work out, where I should come out? If it doesn't work out and price is falling, or trend has reversed, because you have formed a strategy which is going to work for you in the both the directions. You have formed a strategy. Again, I am just going to show you the same strategy. Index future, Nifty, and load data. If you are a user of the option strategy software, you can think of this one. So you are selling one lot. You are selling a put option of 9950. That too also one lot. Sell one lot. And you are buying call option of 10,100 because this is near to my second target. I'm just buying two lots to make it delta neutral. 7 days hold. Calculate, it is going, it is buy two lot. Calculate, so it is going up, no problem, I am making profit. If it is falling down and the trend change has happened, 9995 below trend change has happened. So what I should do? So if 9995 below the trend change has happened, this is the trend picture. So this here my downtrend starts. You can exit at downtrend price 9981 level. You can exit. Small profit will be there. Some 200, 300 or 500 will be there. You can come out from that strategy. Even though if you forgot to come out and just hold it till 9900 level or 9863 level, then also one small profit will come. Similar kind of strategies you can initiate if you are not comfortable with the future buy along with the options, so that some time value you can protect, you can able to also make good money in the market. Your objective should be to make profit with a proper risk management. With proper risk management you can do the, you can make profit. So this is one strategy you can just learn, and some contra strategy also, contra trend strategy I am giving with the report. So that kind of strategy also you can initiate and follow. And option trade is must, because few days after you are going to get the commodity option also. You have got weekly options. In future days to come, you will get many option to instruments available in the market. Simply giving a excuse that no, I will simply look at one price, buy it, and it should give me profit, and I should not land in any loss, and I will not learn option. That is not the way to sustain in the market in long run. If you want to sustain in the market in long run, you must read option, you must learn option. So this is the Bank Nifty levels for the coming week. So 24,359 above, we are expecting till 24,700. If it fell and goes below 24,130, you can get till 23,760. So this is what, so this already I told you, Mr. Ganesh Mopanaji, this specific summary part we have corrected, you have to update so that it can come. So 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 this is what uh, the Bank Nifty trend for the coming week. Any Ajay Gupta ji asking, there are so many ways to work in the market. Which way is the best way? And so by this way, and that way must be, I can add some more to that question, that way must be a profit making way, that should not be any loss making way. So if the journey is a straight line journey and so easy journey, then all will become winner in the market. Market is for the best brains. Market is for the people, those who follow any principle, not only this principle, any principle consistently. So your persistence is highly essential. If you are in a small business, what you are doing every day morning, you are waking up, getting ready for your business. Going and sitting there, whether client is coming or not coming, whether you are getting a sales or not, you are just sitting there. Why you are sitting? Every day, from that example, you must learn that every day is not a profit making day in any business. So if that business is so easy that as soon as I will go and open my shop, 10 people will be standing on queue, they will buy my goods. Every day I will have this much of sales. Then you can say that everybody will jump into the business and there should not be any competition, nothing. So these are the all irrational things. So in market, if you want to sustain, you have to be a best brain. You have to make your brain to work, and it is too simple to make your brain to work. Thing is that you must have to understand and analyze that I first need to protect myself. I need to protect my capital first. Profit next. Capital protection is first. First, once you do a capital protection, profit will automatically come. Anybody in this room is there who has aggressively trade using the hedging and got success? Anyone can share your experience. Who is using the hedging? I know last time also I have told Mr. Naines Mopanaji, he has said lot of contract notes with me. Firing, hedging is must. He is hedging and he is doing the trade. That I know. If anybody of you who is using a concept of hedging and trading consistently, not that today I will hedge and trade, tomorrow I will forget and I will follow my principle. So not that. So one trader who has constantly given his feedbacks, and he has also put in our Facebook, in my Facebook also, in our Facebook channel also, you find out many posts he has given, old posts you can find out from this thing. So, old posts, many old posts wherein he has given his contract notes and other things also displayed here, that he has taken some positions along with the hedging and he has made the profit. Many contract notes he has sent to me by the WhatsApp also. So he has got success in that. He is also present here today. Nanesh Moparaji, lot of questions also he has asked. I have attended. So if he is getting the benefit of by hedging, he is able to make the profit. Why not you? Why you cannot make it? Maybe the stocks of your choice will be different. Maybe the entry point of yours will be different. But definitely it is, and that doesn't mean that once you become hedge it, you will become always a winner and you will never lose money. That don't translate that things to overstretch that and translate that my talk of hedging to that way. Don't think that if I will hedge, I will never lose, I will ever become a winner. That is not the context of that talk. Context of that talk is whenever I am hedging, I am protecting myself. So means that is once you protect, yes. So means you can say once you protect your capital, definitely profit is going to come. Certain times you will lose. However, the impact of losses will be less as compared to the non-protected trades. When you do not protect a trade, whatever the losses comes, suppose you bought Bank Nifty at 24,360. Stop loss is got triggered. Whatever 10 point, 15 point, 20 point, wherever you put the stop loss. If you put from 24,300, I will put my stop loss. You entered at 24,315. This 15 point also you lost. If you have bought here, not only this stop loss, if it is not looking good to you and you are putting the stop loss at 24,300, that 15 point what you have lost, it is a permanent loss for you. But if you have hedged here, out of that 15 point, at least 5 point if you can recover. So your net loss will be reduced. So if you have 50% of losing trade, imagine you have initiated 10 trades in a month. 5 trades you win perfectly. 5 trades you lost perfectly. Stop loss hit. In these 5 losing trades, if 80% or 70% of your lost capital you recovered, and here these 5 winning trades are there, then your net will be great gain. So this 80% of recovery on these 5 losing trades makes it a 3 successful trade. So your net success increases. Definitely you follow the stop loss. After hedging, why you should not follow the stop loss? Stop loss has nothing to do with the hedging. Stop loss is the trend has changed. Trend is changed means you have to change your direction. Trend has changed means you have to change your direction. Direction of your trade. After hedging also, if the trend has changed, Bank Nifty is giving a downtrend confirmation now. Why to hold that trend? Just change your direction. Book the loss, it whatever loss comes, factoral loss, accept it and change your direction. So that is also to stock market that this is a easy place to make money. Out of that 100 people, 90% of people doesn't make money. Why? What happens? What happens that we should not 90% are losing the money. What for? Because whatever is the real life examples are there. When it comes to trading, we never follow any real life experience. Our real life experience is not reflected in our trade practice. That is the cause of our failure. When you go for studies, you are inquiring that how best the institution is. But whenever you are going to invest or trade, you do not inquire about that. Whenever you invest in any asset class, like it is a land, building, or anything, you assess that this area is good, this is going to improve. I should invest in this land or building here. But when it comes to the stock market trading, nothing is there. Just put a stop loss and accept that loss. So that is only one thing we have learned, and that so strongly that the stop loss is sitting in our mind that we have diluted that stop loss definition, but following the stop loss. Many have diluted the definition of stop loss, as I told you. Stock options better you avoid, Ramkumarji, in the stock this option scanner. Stock options are highly illiquid. Better to avoid that and go with the index options. It will be highly appropriate. So Nines Mukherjee also has given this week's last week's that Aurobindo Pharma. This also given a great success. Already I have told Mr. Arindam Das ji how to do BTST trade, as I told you. Post noon you have to initiate the levels, choose the positional option and use the number of days as 2. Calculate post 12 noon, generate the levels. By 3:30 if you are getting the level, enter with proper hedging. If Ramkumarji is getting the benefit of following the same tool, why not you? Many used to say that after taking the software after 10-15 days, they used to say that it is not working for me, I am not able to make money. I am getting the stop loss triggering this, that. Definitely, stop loss triggering will not be there. That I have never told before selling this product. I have never told that if you buy smart finance product, no stop loss triggering will be there. You enter, get profit. I never told. Nowhere we have promised that also. For Nines Mukherjee also stop loss triggered. For Ramkumarji also stop loss triggered. They are happy. They are making some profit. Why all the people who criticize that part, that I am not getting the things, why not they are getting the success? The reason is whatever software they take, they dilute that principle according to their convenience. Whatever software levels generated, your failure is not because of smart finance software or because of any other software. Whatever software they use, whatever tick chart they use, whatever technical indicator they use, they twist that analysis to their convenience, which is pleasing to their mind. Stop loss they follow, stop loss definition they never follow. They never accept also. There is a where the trend change happens, there only the stop loss point will be there. That definition they never accept. Only they accept the word stop loss. So they never hedge. So they never, once they never hedge, what happens? Whatever, even though they got 60 or 70 to 80% of the trades is successful, 80% of the trades is successful, and 20% of the trades are failure. That 20% also land them in the negative return. So that is the reason. Try to follow the principle. It is my sincere request. Try to follow the principles as it is. So here his view past 2 weeks. He's been using the option scanner. He has got stop loss hit in intraday twice of it. Remember, out of 10 to 12 trades. So this is what also it has given. Cluster, Arindam Das ji, cluster is the most important support and resistance at a moment. This will be utilized once the price enter to the second cycle. If the price enter to second cycle, this cluster will be utilized the stop loss of the first cycle of this trade. So suppose if you are buying at 24,596, your stop loss will be 24,412. If you are selling at 23,939, your stop loss will be 24,077. So cluster is the most important resistance and most important support. When the price is rising above 24,315, the major resistance is 24,412. So that is also another definition of the cluster, where the maximum resistance you can find, maximum support you can find, and the technical definition is the price point from which majority of the retracement line passes. This retracement line, what we have drawn here, 0.236 to 1.618, all are Fibonacci retracement lines. In a chart, if you can draw all these lines, this one price point will be there, which will be having a nature to touch majority of the retracement lines. That is also known as your cluster. And if you know about the fan line, Fibonacci fan line or Fibonacci arc, that concept, so this is the price point which is having a presence in the Fibonacci, mid Fibonacci fan line and mid Fibonacci arc. That is also another definition of cluster. To use the software to its maximum extent, any query you get, put the email, that is a mode of communication channel you can have. In case if you have any further queries, try to join this buyers development program. Monthly twice, it is intimated to you through your SMS and email. Join this program, ask your queries. So by this process, you can improve your successability in the trade. I thank you all for coming for this program. I have taken the recording. If the recording comes good, I will definitely share with you. And keep following the YouTube channel of Smart Finance. Lot of literatures are there. In your free time, try to go through that and equip yourself with some skills. It is very important now. Though in market, every year 40% new traders are getting added, 40% of new traders are getting added. But skilled traders only 0.5% to 1%. Skilled trader means how many years you are trading. Skilled traders means the trader who believes on the technical studies, trader who follows a proper risk management technique, trader who is very flexible, that is market works on specific principle. Market is not the place for a gambler, or it is not a place of gambling. Market is a perfect place where you can test your real skills, and market work on perfect trend analysis method. And being associated with the Smart Finance as a buyer, you have been supplied with lot of new literatures, new concept, which is our own innovation. In your free time, if you can go through that and at least apply 10 to 20% of those literatures in your trading practice, you will definitely see a positive change in your trading. And once that positive changes comes, it will definitely convert it to profit. So my final word, if you are trading, must trade with a proper hedging. If you face any difficulty that where to hedge, what to hedge, when to hedge, if you have any such difficulties, put the email to us, your supporting email ID, what is being given to you. Put the email there. I will definitely attend your queries. Thank you very much. Thank you for attending this program.